Welcome back, everyone. This is our Gold Weekly Review. My name is Angelo Zittis, and this week's title is Still Waters Run Deep. Gold prices regained some ground to the upside in the latest days after various fundamental drivers did not have any significant developments. Worries were fueled and may have mobilized traders to add more gold long positions in their portfolios. Is this rise a trend that is here to stay? How long can bulls go with the current market circumstances? These are some questions that will be tested in this weekly review. First, the high expectations market participants and traders had on the potential US Sino Phase 1 deal have been somewhat subdued. We are not saying that the deal will not be signed. We are saying the market sentiment was very optimistic and that the two sides were very close signing a deal, but currently may have turned into pessimism or even doubt. In any case, it must be clear that the importance of the two sides signing a deal that will satisfy both may require more time than the market initially thought. Both US and China are aware that signing a deal will have a significant impact on the future performance of their economies, but also their inner circumstances of the country, like employment, finance, energy prices, industrial and manufacturing sectors. So rushing into a deal is off the table for both sides. Furthermore, other analysts claim that the market sentiment has moved into doubt after the US president stated that the tariffs on Chinese products will not be removed. Keeping tariffs in the picture leaves Beijing exposed because in a way they have not resolved the matter that created the situation in the first place. So how can they make further retreats and sign a deal when trade barriers still remain? In our view, the situation has gone from positive and productive talks to a deadlock once more, pushing prices a little bit higher compared to last week. Traders may believe that according to the upcoming tariffs projected for the 15th of December, doubts could increase even further as more pressure is placed on Beijing. In this case, we could see gold prices picking up even further and looking to make a statement that buying gold is still an option for hedging increased risk. On the same matter, but on a different front, these developments have also weighed in on the US dollar. A weakening US dollar has the effect of pushing gold prices higher most of the times. Then again, another happening that took place in the days before that may have also affected gold prices. Comments by US President Donald Trump criticized the Fed for keeping rates too high in comparison to other countries. He also stated that the US dollar was too expensive, holding down manufacturing and growth in the US. The comments may have enacted the selling momentum for the greenback in the latest sessions. According to the dollar index, which measures the strength of the US dollar against a number of other currencies, the greenback has indeed moved higher in 2019. This is evidence that the US dollar has been superior to other competitor currencies. Also, we had noted in our report in the previous week that another factor that could be energizing gold traders to add long positions is the situation in Hong Kong. Things in Hong Kong are getting worse as protesters continue to clash with police on the streets, creating an atmosphere of violence and war. Our estimate is that if the situation remains out of control, at some point the inner political picture will hit a wall and will either need for the government to compromise or add more power to fight protesters. Gold is considered a safe store of value during economic or political uncertainties, and volatility may come to increase if things escalate even further. Finally, Hong Kong also possesses a great threat to the US-Sino relationships, especially after the US Congress speeded up the process of voting on new laws regarding the happenings. As a conclusion, gold prices have a good chance of picking up volatility upon release of today's US housing starts number for October. On Wednesday, analysts believe gold traders may be interested in the FOMC meeting minutes, while on Thursday we also get the existing home sales for October. In addition, on Friday we get both the market manufacturing and services PMI preliminary figures for November, a rather important release from our viewpoint. Moving on to our technical analysis, this is gold's daily chart. Our gold chart this week is brought to a daily time frame as the metal has not made any significant movement since last week. It has, however, moved higher and managed to surpass our 1470 R1 level, where at some point it even reached 1475, only to correct back to our R1. If the metal attracts buyers, then above the R1 follows the 1480 R2 level, which was last seen in the first week of November. Next levels higher could be the 1490 R3 or even the 1500 R4 line. We would like to note that if gold has the strength to reach our R3 and R4 levels, it would confirm the revival of a bullish trend and that fundamentals have changed drastically. Moving to a selling scenario, our 1450 S1 level could be the first level to be approached if the bears take over. Gold has not managed to trade below our S1 since July 2019. If the momentum is to continue, the next stop lower could be the 1440 S2 or even the 1430 S3 level. Yet, if any of the fundamental matters we just passed through in this report is resolved, we would not be surprised if the metal drops to our 1413 S4 level. The RSI indicator below our chart could be implying that in the next daily time frame, some ambiguity exists between traders on the further direction of gold prices. If you've heard something in this report that is useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time, and we'll see you next week.